Good morning, everybody. Welcome back to the Opportunistic Trader. It is 10:50 on October 3rd. We just saw the DOE crude oil inventory report come out, and as we are almost every week joined by Commodity Research Group's Andy Lebow, who breaks down all the data, gives a lot of insight. Andy, how are you?
I'm good, Michael. How you doing?
I'm good. I'm good. It's midweek here. Had a lot of activity. Q4 just started. We were mentioning crude got off to a great start for
Oh man.
Q4,
Yeah.
and then we just saw this data. Initial price action in the data was crude was trading about $75. We moved down to 74.30, and here we are at 75.30. So tell me, what did the data actually say?
It went from 74.30 to 75.30.
Yes. So the
Wow.
initial headline
I
was
didn't
we were
see
trading
I didn't
70.
see that last move up.
Yeah, well, it actually looks like I ran some stops, got up to 75, 55 or so. Ran some stops on the move back. And, I think part of it comes back to we're just in a strong bullish channel here. And so, any sort of sell off is met with support at the moment.
I think you're right, Michael, because less similar to last week when we talked about the numbers being bearish. The numbers this week were bearish, but you know, also similar to last week. The market isn't trading off these. I think if it were. I think that 74.30 number would be the correct response. We built by 8 million relative to expectations of 1.5 by the street. I was looking for up 3 to 3.4, which may have been on the outside of estimates, and we came in +8, and we're gonna come in not +8 every week, but there's going to be a 1 to 3 million barrel build now coming up over the next, I think a few weeks straight on average, and we'll see how the market handles that build. I guess for yeah, to a certain extent, it's discounted. We're into turnarounds. We mentioned how finally, refiners are beginning to ease off the throttle after going running at in the 90s percentile. Pad two refiners are running like 98 percentile during August into September. So we're going to see these builds. Gasoline also, I thought, even though there was a draw and the market was looking for a build, I was looking for up 1.4. I think the street was around 1. I got to tell you something. Pad one, which is the delivery point for futures, it built. We're swimming in gasoline up here in the Northeast, and I can't believe it built. There are all these refinery problems, and nevertheless, stocks in the Northeast built. So there's nothing. It's hard to get excited in the least about gasoline. Inventories are ample, and distillate. As we've been saying, distillate is probably the best of the three. It drew by 1.8. I think the street was looking for down 1.3, so that came in right around expectations. And distillate stocks are still on the low side, not as low as they had been, but I'd still put distillate in the neutral to bullish camp. And total stocks built, of course, because of crude. Cushing built too, and Cushing is about to experience some serious builds as Pad 2 refiners take turnarounds, and there's a new pipeline, an expansion of an existing pipeline that is going to take crude from Permian in West Texas into Cushing. That began line fill, I think it was October 1st, and that should be in operation in November. So that's going to be bearish for Cushing, but the market isn't particularly looking at this right now.
Yeah, I think initially the headlines saw, the algos saw, the high $8 million build. I'm sorry, 8 million barrel build, and pulled off. And but here we are, basically back to the past 2-day range, 75.30, which is still at levels we haven't seen in a number of years. So price action is very supportive right here. But you're talking about looking at, builds, further builds over the coming weeks and months. Do you think that this is kind of a level where you want to get looking if you're long to take some off the table, or do you think that?
Yeah, I do. I think that the market is discounting, particularly the Brent market. It's discounting a lot of bad things happening in this market. It's almost as if it's saying, all right, we expect that Libya and Nigeria are going to lose production. Now certainly if Libya and Nigeria do lose production, yeah, the market's going to, the market I think would be fairly valued, or we could have some upside from here. But for now, both of them are, they're producing. Libya's up over 1 million barrels a day, and Nigerian production is high enough where there's Nigerian crude floating. They haven't even sold their October programs yet. They're not sold out for October. So yeah, I think it is time to take some off the table, and I'd be wary. I'd be wary about buying it up here. For I'd just be wary about buying it up here, Michael.
What do you think are the key risks that are built in terms of, because we're just actually speaking with Phil Flynn, and he was saying that December 2020 oil is trading in the mid 60s. So basically $10 a barrel, $10 higher in the near months than it is out, a fair month out
Right,
in the
right,
future. So,
right.
but what sort of risks are being priced in right here that probably aren't going to be coming to fruition?
Well, we don't know. Here's what I think is being priced at. I mean, clearly, the market is saying that Iranian exports are going to be down more than it thought. At 1.5 million barrels a day. That the Saudis and Russians are not going to be able to make up the shortfall, which is certainly true. As Michael, I don't know. Every time I'm on with you, we talk about the shortfall in fourth quarter, right? So it isn't as though, this is a huge, revelation to the market that there's going to be a shortfall and we're going to start drawing stocks. I think the market knows that. We may draw a little bit, 100 to 200 more than maybe the market had expected. But, I think that it's pretty well known that we're going to start, we're going to start drawing stocks here. And the key to me is, when are we going to start? And I think people are beginning to talk about this finally. When are we going to start looking at first half of 2019, when there looks like there's going to be a pretty sizable surplus, because Saudi will have ramped up some more. Russia will be ramping up some more. There'll be more U.S. barrels. In first quarter, demand seasonally declines by at least 1 million barrels a day. And of course, we also have what's going to happen with the emerging markets. How much are we going to lose demand there because of the dollar and higher interest rates and price? So, first quarter and second quarter look like there's going to be, there could be like 700 to 1 million barrels a day surplus. And, at some point, the market's going to move beyond this, Iranian, oh my God, we're drawing stocks in the fourth quarter, to, oh my God, we're going to build stocks in the first half, And it's that, I guess it's when that happens, right, Michael? That's the tricky part, is when that happens. How do you time that? I guess the market will tell you that, okay, it's beginning to look forward rather than forward 5 or 6 months, and because of that, that's why you have the big discounts in the back of the curve.
Yeah. Well, it like you said, you pointed out a few good things there. How Q1 typically we don't have as much demand, and it seems like we're getting to a point where we are having a lot of production. So those would typically be bearish sort of catalysts together. But certainly right now we're anybody talking about anything bearish.
No, no. I mean, the market. The tape is obviously. I mean, it's as you said, it's in a pretty strong bull channel here,
Yeah, and we got
and
the $10
you
spread
don't want to.
roughly.
You really don't want to fight that. I mean, that's. I guess you wait. until there's some kind of reversal.
It looks like there's a $9.50. I'm sorry, $9.80 spread between WTI and Brent. So that hasn't moved a whole lot in the past day or two, but still a significant differential.
Yeah, and that could weaken further. I think, and I saw some of the banks were also talking about that. I know we've been talking about it, that because Cushing is going to start building pretty good here over the next 4 to 6 weeks. There still could be some pressure on the U.S. domestic market relative to the Brent market, and margins are still pretty good in the eastern hemisphere. So and there's been some decent Chinese buying in the eastern hemisphere. So I really think that could soften some more Brent TI.
Do you follow Canadian oil prices?
Yeah, they've collapsed, man. I mean, it's unbelievable what's happened in
Well,
Canada.
what is happening in the spread between Canada and U.S. and just Canadian oil?
Well, you can't believe what's happening. I mean, right now, the heavy Canadian, at least according to Reuters marks, I haven't seen the Platts numbers, but the Reuters marks have WCS, Western Canadian Select, at 45.50 under. That's $45.50 under WTI, and they have Syncrude, which is the light Canadian crude, at $20.50
So
under.
why aren't we just gobbling that up like it's no tomorrow?
Well, that yeah, wouldn't that be great? However, you can't get it.
However,
However, you cannot get it because the pipeline. This is where Canada is. It's really problematic for the Canadians because they cannot get their barrels out. The pipelines are all full. There are no new. Any new pipeline has met with tremendous opposition by the Greens, and let's look at, it's going to be another, probably not till 2020, till some of the congestion in,
so do they have excess supply and they just really can't, they don't have the infrastructure to get it out?
yeah, that's it. There's no place to get it. I mean, you can't, you could truck it, you begin to rail it, but, and rail demand is beginning to pick up. But, relative to pipelines, you can't export as much on rail. You're filling up the rail cars and sending them out. It's not like sending hundreds of thousands of barrels a day out on a pipeline. And you remember the whole Keystone XL fiasco that went on for years and years and years. They
That's
haven't. They
where
had.
is that actually?
How's this? It was approved by the current administration on like day one.
Right.
You know, it's still, they still haven't begun. Construction is still not underway. So that thing is not going to get, if it ever gets built. That still is years away. It's not going to be not going to be to like 2019, 2020, I think, until that's operational, if that. And the Canadians are building. They are there's expansion to some of the big pipelines out of the oil sands, but they're going to take time. It's similar to what's going on in the U.S. With the Permian. We're going to be building more pipeline capacity. The Sunrise is just the beginning, but it's still not going to be to 2019 or 2019
So do you
second
happen
half.
to know if you're living in Canada right now and you're filling up your tank, what are you paying per gallon?
I don't know. I mean, that I don't know. Again, that would be Western Canada, Eastern Canada. The refineries. In Eastern Canada, they're priced on Brent. So, assumingly, I assume that Eastern Canada is around where ours are, but their taxes are higher. So, I really don't know what the pump price is in Canada. Of course, it's based on the loonie. So,
A lot of variables. But
you
that's
pay,
pretty
yeah,
interesting though.
a
But that spread, like
lot
you
of
said though,
variables.
if it's 20, 30, $40 below,
It's
uh,
45 below. There's nothing but, you know, again,
at
they're
45
trying
below,
to
there's a
build.
lot of
You're
opportunity there
trying
to
to
even
build
truck it.
infrastructure. You can get there. It isn't like there's a million trucks around either.
No.
If let's say you even wanted to fill up a truck,
Well,
you
trucks are
know,
small in terms of how many
right?
gallons they hold, but you can definitely
Exactly.
get a bunch of rail cars.
Rail cars is the way to
You'd
go.
have to
It's
think
the
that
way it's going, and in fact, as I was saying, demand is going to pick up for rail a lot here coming up, but it still doesn't. It still doesn't compete really with the efficiency of pipelines, and in any way, really in any way. I mean, we had that, and they had that big rail accident. Remember that a few years ago in Quebec. So even
sure.
they've tried to improve the environmental impact of rail shipping, um, and I think
So, two things. Let's go with one. You just told me you're going to be out of town on a beautiful vacation for the next 10 days or so. So, you're not going to be with us next Wednesday.
no,
Where do you think we are price wise in 2 weeks when you get back? Crude
I
oil,
think
here we
we're
are,
listen.
75.50.
I'm a little negative, so I think that sometime during October, WTI is going to shift into the low 70s, and then maybe even take a run with at a six handle. So I would say I'd say at least 72.
Good, good. So there you go. You're definitely more on the pessimistic side where we are right now, looking to fade the market. And so you would rely on Jim Colburn, your partner over there, to
Right.
give you
Yeah,
some
to get
optionality
some
and actually
options.
different ways of
It's not
looking at
because
expressing that view.
right, Michael, I think we know this isn't one where you just go in and
Right. Just
try
sell the
to
second, but
sell the first dip or whatever. I mean, like today's action, you know, a bearish number and boom,
and then second thing before we get you out of here is literally just before you came on, I got an email from your other partner Ed Meir with the October monthly report from Commodity Research Group. It's really an in-depth look at all different commodities. What's interesting in there? I'm going to post it on the website so everybody will be able to see
great.
the
Oh,
Commodity
that's that.
Research Group monthly report. That'll be posted in the next hour or so. But what's the preview there?
Well, Michael, I have to tell you, I have yet to read the report because Ed writes a lot of it and I write the oils. And I think I've given you a pretty good preview of what we're saying on oils. And as soon as I get a chance, once we're off, I'll read Ed's report. He does an unbelievable job, and I know he comes on with you weekly, and it's really great to listen to Ed, particularly when if Ed's talking copper, you got to be listening because I think he's always rated like number one or two amongst copper and base metal analysts.
Yeah, absolutely. A lot of great information. He was on last week with us talking about copper. We've had a pretty good rally in the base metals, especially versus precious metals, and even precious. Yesterday gold had its one day shine, but as of right now, it's fizzling out a little. It's down about $1.50. It's about $7 off yesterday's high. But yeah, a lot of interesting stuff in the commodity world, and you guys provide a lot of great information. So that's Andy Lebow of Commodity Research Group. Thanks a lot for the information. Have a great vacation, and we'll definitely talk to you when you get back.
All right. Thanks a lot, Michael.
All right,
Thanks
thanks.
for having me on.
Of course.